Hey, YouTube folks. Good to see everybody. All right. So we're taking a look at the economic calendar here to kick off the morning, to really focus ourselves on the catalysts, those hot zones that are likely to move the market. We also want to remember what already moved the market. There is always a possibility of just what I call an echo. The fact that whatever happened at 8:30 could then, think about it this way, sort of an echo. Think of it this way. There are a pretty big group of traders that don't have access to entering their orders or ideas or plans at 8:30 in the morning. Now, if you're a futures trader, you do, and maybe you have. The pre-market 7 to 9:30 is probably my second favorite window for trading, for day trading. And we have access to that via Forex, via futures. But think of all the traders that are stock traders. They're sitting on their hands or waiting for the bell to ring, and then they can respond to this thing that happened an hour ago. That's this echo response that we talk about. Is there going to be an echo? Well, take a look. Right here, 8:30, we had the move lower. Now, I know a lot of traders want to know first, well, what was the number? And frankly, you notice I haven't even refreshed my Forex Factory page. That's not the first priority for me at all. I want to see the price reaction. Later on, I'll circle back. I'll take a look at Thursday and say, all right, unemployment claims were less than the 215 forecast. And GDP was in line with not only the forecast, but the previous number. Here's where it gets a little tricky. Good and bad is very subjective. So was this a surprise to the downside or surprise to the upside? Was the final GDP number shocking in either way? No, it actually was not. Stability in an environment where traders, investors are nervous would be considered positive, right? I guess you can say good. Unemployment claims being less than the 215, again, that's on the side of positive. So you might say, Rag, why sell off on quote unquote good news? Because this is the environment where in a hawkish tightening, right, cycle, we're seeing higher rates. As long as the economy looks stable, as long as the data looks stable, if not quote unquote good, there's no reason for the Federal Reserve to change their messaging or their monetary policy trajectory. In other words, if we're looking for a Fed pivot, this is not the data that's going to inch us closer to that. So, whoosh, market sell-off. And not dramatically. Let's not take a 5-minute down candle, even though it is a candle of unusual size compared to the candles that preceded it. Let's not get too dramatic about it, because this is how I keep sanity. Are we going anywhere new? Absolutely not. You take a look at that S&P. Right now, today's candle is trading within the high-low range of the Wednesday session. This is an inside candle. Some of you might call it a harami. You can call it a ham sandwich. It doesn't matter as long as we're on the same page, which is the range is still swallowed up within the previous session. Okay, so with that being said, let's go ahead and jump into your questions. And first up is, let's see, good morning, everybody. Absolutely, good morning. Hey there, Christian. All right, why Fed members go into speeches almost every day? I guess they think it's their job to communicate monetary policy. Sometimes less is more, is it not? They don't get paid enough. Good question. What new thing they have to tell if they talk every day? So this is the way I look at it, and I hear you, my friend. This is the way that I look at it. It's going to offer us volatility, and volatility is in many ways opportunity. It's going to give us a little bit more granular insight into which way they are attempting to steer us in terms of expectation. So let's just use that information. We can't stop it. We can't change it. So let's say, how can we be opportunistic about it? How can we use this event that we can't control whether or not it happens? But I hear you. All right. next up. And thank you for all the concerns. No hurricane issues whatsoever. Just a little bit busy a morning. So my apologies, but we are good to go. Thank you. Thank you for the concern. Gosh, save it for the folks on the West Coast. I'm on the East Coast of Florida. We got a lot of rain. We got a lot of wind, but nothing like the folks in, say, Fort Myers Beach got. That storm surge was insane. So, but we are doing well. And thinking of those of you on the West Coast, I know we have quite a few members in my Sector Secrets Mastery that were in the St. Pete, Tampa area. Looks like it did not hit there directly. It was a little bit south of you, which is good for you all. I'm happy. Definitely tough for those folks just a little bit south, but I appreciate the concern. All right. Siba, I hope I'm pronouncing your name properly. Do I think yesterday's giant gains for the market was an anomaly due to the BOE? So, Siba, I don't know when you say market and BOE. I'm not sure which market you're talking about. Indices, I'm guessing. Do I think it had to do with the Bank of England? No, I really don't. The Bank of England absolutely was not the reason for the pound movement lower. In fact, that was not a monetary policy catalyst. It was actually a fiscal policy. And I might say, okay, Rog, what's the difference? One is the chancellor of whatever that person is a chancellor of, speaking of fiscal policy and keeping a more accommodative a policy fiscally. Monetary policy would be the Bank of England. And they are two different things. They're two different mouthpieces, if you will. And pound did recover pretty nicely from that sell-off we saw on the 26th. But as far as the pound goes, yeah, probably an overreaction to your point. Maybe an overreaction, but I don't believe the US markets or really equities at all were that concerned about what happened in the UK. I don't believe that S&P or the NAS, based on what I see, was really moving because of that. But great question. I love how you're thinking, trying to connect the dots. Absolutely. US dollar. Hey there, Janet. So let's jump on over to the DXY. One of the things that I encourage a lot of traders to do is don't be too concerned about the DX US dollar futures or even DXY, because your best look at currencies are always going to be Forex. The next best echo of what's happening in Forex, in the foreign exchange, in the biggest market in the world, which happens to be focused on currency pairs, is then going to be the futures contracts. The best way to understand the dollar in that broadest sense would then be looking at, let me get to my symbols here. There we go. Looking at the euro, the 6E. That would be your best bet. And by looking at the 6E, we're looking at the number one, but actually it's the largest market in the world of any kind. There's no market that trades more in any market. There's no symbol that trades more than the euro versus US dollar. The 6E to the futures is one version of that conversation. It's also the heaviest weighted currency within the dollar index basket. If euro is still more or less in a downtrend, if yen is more or less in a downtrend, if pound, which of course we just took a look at it, is more or less in a downtrend, dollar is going to be able to stay strong. And that's really where we want to focus on what our expectations are for what comes next for the greenback. Where's the euro heading? Where's the yen heading? Where is that pound sterling heading? And as long as they're weak, dollar, even if there's no reason for the dollar itself to be strong, the other currencies weakening against it from a relative performance perspective keep the dollar strong. Thanks for the question. Can we sell the rip on Night Swift transportation? I don't have that as a downtrend. Dustin, I can see where you're coming from, but I do not have that as a downtrend. Now, let me grab my drawing tools here. What's really interesting is that, take a look here. We've had a very difficult time when we are below it, getting above the mean of the volume weighted average price. That could be your sell the rip. not based on a downtrending structure is a problem for me. But so the way I would look at this consequently is it overbought? Can I use a slow stochastic? Whatever your choice, whatever your preferred overbought or oversold indicator is, maybe it's already aim fire here. It's simpler. Maybe it's a slow stochastic, the way I teach you all with a 21K 3D 80/20. Whatever your preferred overbought oversold indicator is, volume is saying this is a level to watch. So it's not a trend. So for me, my jargon of sell the rip or buy the dip is only in trends. But within the context of chop, overbought and oversold is a little bit more applicable. I think a little bit more accurate, but I think you could look for a short. Yeah, sure. Minor lows keep coming and going. When is the confirmation for a long? Avi, I don't know. I don't know what's going to happen. I can only respond to what is going to happen, but I hear you. Now we haven't broken the current minor low. Now remember, gang, minor low validity, and I love that you're looking at the validity, Avi. Love it, because part of any trade isn't just I've chose my price levels and I've parked my conditional limit or stop orders, right? That's part of it. But probably the most important part is what you're bringing up, which is that trade idea still valid? Every day as a swing trader, I'm going to look at that. Every week as an investor, as my position trades in my portfolio, I've got to look at that. And really every 5 minutes as a day trader, I've got to re-examine, reassess what the underlying structure is, because shifts in structure are also shifts in strategy. So I love that you're looking for the continuation of that structure to be valid. In this case, the structure of the pattern, right? The current minor low is in play, but you're right. If we keep pushing the lower lows, we can't use that pattern. One of them will work. Look, we had, let's see, take a look at the last time we had a minor low. It reset once, twice. The third time was the charm. So I love that you're looking for the validity. I love that you're looking to make sure that that entry is still valid. I'd keep an eye on the S&P. There are a number of minor lows. We'll definitely dive into them when I'm with you all in the futures and my sector secrets mastery in about 5 minutes. So awesome question. Let me point out one more that I'm going to be looking at today. That is Apple. Apple sold off on the news. Now get this. Not that they were reducing production of the iPhone 14, but rather they weren't going to increase it. So the plan was they're going to increase production because of the demand. They're not going to have to increase it. Is that a decrease in production? Not really. Not if you didn't increase it in the first place. So I look at that as an overreaction. Structurally, there's reason to believe that the -1 standard deviation of volume, the volume weighted average price, should hold. It will until it doesn't. We're going to presume support is going to hold unless it turns into a downtrend or until it doesn't hold as support. There's that, the best worst movie ever. I'm sure everyone has their favorites. For my husband and I, it's Roadhouse. The original, not whatever Hollywood is remaking, which should be illegal at this point. Roadhouse, the original with Mr. Patrick Swayze. It's time, remember that line, you be nice until it's time to not be nice? I love that. It's support until it's no longer support, right? We'll treat it as support until it's no longer time to treat it as support. So we're going to presume it's going to hold. I think a lot of traders have a presumption that it's going to break, right? So we don't want to presume something that hasn't happened yet. We have to let it happen because traders, we're counterpunchers. What happened doesn't mean anything to us. What happened isn't an entry. What happened is, do we need to manage risk, right? So it's always assessing, right? Look, if for a sports analogy, we do this in every other walk of life. We watch football. Football season's back. Quarterback steps back. He's got the ball from center. He looks across the field. He's not going to just throw the ball because that's his favorite play. A lot of traders do that. Oh, my favorite play. Let's just do that. No, checks each one of the different routes, throws the one that presumably would end up being best. That's us. We're the quarterback of our account. So I love that, we're continuing to assess the structure of the market. Yeah. And I'll be keeping an eye on Apple because this is possibly an overreaction, but I need the setup. And if we get the setup, this is a very similar one, Avi. We might get, and Avi, to your question, remember, minor lows can sometimes also accompany the harami, the inside day as well. All right, Martha, how are you? FGBL. You got it. You got it. All right. I don't know anything about FGBL. Looking at is this the daily time frame? Is this what First Trust Global Public Funds? Am I looking at the right symbol? FGBL. Martha, I got nothing here. No, I got absolutely nothing here. There's nothing to work with. There's nothing to see. Maybe on the weekly. I don't know if maybe my charts are off. The weekly looks clean. So I would have to say, first of all, I'd have to realign with the structure on the weekly. And then we're above the 200. Not an uptrend, but in chop. So look at the recent Darvis near the lows. I don't have any insight on this one, to be quite frank, but maybe around 39.90 to 4,000. Not something I would typically keep an eye on, but if you've got skin in the game and you're bullish, I get it. Way to follow the trend. Wait for another oversold level, and then go from there. You just read an article about the German bond. Oh, okay. Yeah, that's all I've got there. Very expensive. Yeah, there might be other ways. You mentioned that. Okay, so you're looking at bunds. Yeah, there might be other way to play bunds. Just curious. Hey, you know what? A lot of great trade ideas and trade stories, as I like to call them, because every trade has a story. My Apple trade has a story. And then we try to match up the story with the technicals. So a lot of times, a lot of stories just start off with, hey, what about this? And getting curious. I love it. Curiosity is fantastic. All right, gang. That's it for me today. Thank you, as always, for being a part of Charts and Coffee. I hope to see you all tomorrow. And we'll be here again, 9 a.m. as we are Monday through Friday. My Sector Secrets and Simpler Futures members, we're going to day trade this morning. 9:30 to 10:35 has been that sweet spot for us. Let's see if we can't just continue to slay this market in that 1 hour and 5 minute window, and then free ourselves up to not be as concerned about the uncertainty, circling clearly the longer term time frames. Are we going to make lower lows? Are we going to bounce? Is there going to be a continuation? Is there going to be a short squeeze? All valid questions that don't really have answers yet, but the answers and some of the best setups have really been on those short-term time frames. So let's get to it. Gang, I'll see you all tomorrow. Be good to each other.